Hey, what is up, everybody? Welcome to the Average Joe Dividends YouTube channel. This is portfolio update number 113. Happy Friday, everybody. In this video, I'm going to show you the 5 picks that I chose with my $100 deposit. What I'm doing right now, my strategy is to do 2 deposits and 2 buys per week. On Monday, I let M1 do the picking based upon my allocations within my portfolio, and I use auto invest for that, and I'll get more into that in a little bit. And again, what I did this time is I picked 5 different stocks, put $20 into each of those, and what we're looking at right now, this is my M1 Finance taxable stock brokerage account, my Average Joe Dividends account here. And we can take a look at the 1-year return here at over 21%, 21.08%. You can see how generally this portfolio has gone up and to the right, but there have been some dips though too. Just remember, when you own stocks, they're not just going to keep going up all the time. We can see about last year around this time we were below the $200,000 mark. We went as low as we've recovered quite nicely up until looks like March. Then we had a little bit of dip occurring in third week of April to 228, and then back up. We've been pretty much in a steady rise, and then we had a nice dip here in August, and then made a recovery to all-time highs at breaking the 260 mark, you can see here. And then September, just like last year, we've been in a slide back down to 252, and then look, we're recovering again, and we're back up almost into the 260 range. So got to endure a lot of ups and downs when you own stocks. It's just the nature of the business, and it's known. No surprises. We can see here the dividends earned over the last 12 months, $11,051.46. So let's go ahead. We'll jump into the activity log. We're going to see what those stocks were that I chose. Of course, what I'm choosing to buy is not investment advice. I'm just showing you what I'm doing week to week and building this portfolio, so you can go back in time to see which stocks I'm buying, which stocks I'm selling. I'm normally a buy and hold investor. I don't do a whole lot of selling. It's really mostly, 99% of the time I am just adding more shares to the portfolio. So let's click in the activity log here. We see 8 buys. So there's actually 3 dividend drips in here, and we can see I received this morning Prudential, $47.12, got $5.70 from Microsoft, and then Home Depot for $9.85. So essentially, I woke up this morning and received $62.67 in dividends. It just appeared in the account. And what we're going to do is we're going to drip that back into these stocks, which means I'm just going to buy more Home Depot, Microsoft, and Prudential with the $62.67. So we can see the $100 deposit put in here, and then the $162.67, again, those are the drips. So you can also look at it as the snowball effect. I put $100, but I have $162.67 of buying power as a result of these dividends. So we'll click here and we'll see what the buys were. And anything that's $20, that's what I chose. Anything not, again, those are the dividend drips. So we can see, first up, I chose AbbVie, $20, and then Fifth Third, $20. Fifth Third just had a nice 6% dividend increase. I'm going to click over here at see news up and just kind of show you this. And what I do is I go to Seeking Alpha a lot and just look up within their news and announcements on dividend increases, and this is how I see, also the new payable dates as well. So this was the news here. So the new dividend for Fifth Third is 37 cents per share. It was prior 35 cents. So essentially for every share you own of Fifth Third, you're getting 2 cents more. It doesn't sound like a whole lot, But we'll see in a little bit how many shares of Fifth Third I own. So we'll see what that impact was. So go back to M1, and then I chose SCHD as the third pick. SCHD is going to have their ex-dividend date coming up, which means you need to buy before this date to capture the next dividend. So I think the next dividend is going to pay out on they're going to declare the next dividend on the 24th of this month, I'm guessing. So I think a couple days before that, I think, is when the ex-dividend date is going to be. And then here's the dividend drip from Microsoft. And then Illinois Toolworks is another one I chose. Prudential, this was, of course, another dividend drip. And then JP Morgan, I chose them. They kind of took a little bit of a dump, where they had like a day, I think it was a couple days ago, where they went down 5 or 7%, just on some, not the greatest news. It wasn't really terrible news for JP Morgan, but I decided to pick up some more. I think it's a really good stock. And then Home Depot, that was the last dividend drip. So we're going to see here what the effect, because there's 8 buys here, this is going to affect my dividend income going forward. So I'm going to show you that really quickly here. We're going to bounce over now to my Google Docs spreadsheet where I track all these stocks. Actually, all the data I have at M1 is going to be on this sheet. And then I'll show you how I import that data into the sheet to do updates to it. It's kind of a slick system here. And I apologize, I'm using a laptop here. It's really struggling. I need to update it, get a new laptop, and we'll let this load up here. And we're going to get this to 75%. We're going to zoom out a little bit because at 100% we can't see the whole screen. But I know, I apologize. It's a little bit hard to read the screen with a spreadsheet, especially if you're using a phone. So I apologize for that. You probably have to zoom into it just to see it. But we'll let this load up here. And really, pretty much what this shows is you can see the company and then the ticker symbol and then the share price. That's using a Google function to pull the share price, so I'm not typing that in manually. And the average share price, the shares, and the cost basis, that is from M1. And we're going to import that data here in just a little bit. And then we can see my gain or loss with each position. And then we can see the percent gain or loss. And then here is the quarterly dividends per share. And we can see here is the current yield if I were to buy more shares of PNC, what that would be. And here's my yield on cost with each position as well. You can see I'm ahead. The yield on cost is higher because I purchased everything at a lower share price than it currently is right now. So we're going to zoom out to 75% so we can kind of see everything here. And we can see the pay date. This is very important. This is what I sort the sheet by because I want to see when I'm going to get paid. And we can see we are in the month of September. So here's my September dividends so far. Just do a quick count up of those. And that includes the 3 you can see highlighted in green here for today, since this is the 13th. These are the dividends that paid me today. And those are included, so you can see the sum in the lower right corner at $150.97. And I'm not even close to receiving all the dividends that I'm expecting for this month. It's going to be a huge month. It's going to be a record month, I am predicting. So you can see the dividend paid, and then you can see the next dividend is larger for these. And the reason is I am dripping those dividends back in to those companies. So you can see Aflac on the 4th paid $10.35. It's going to pay $10.40 in 3 months in December. So all these dividend payers here, they're going to pay me again in December, and they're going to pay me even more. It keeps going up. So what I've done is over here, like for SCHD, I put the dividend here because this is going to change as I update the sheet. This is going to increase. The 972.74 is going to go up because we bought a fractional share of SCHD. Of course, $20 doesn't buy you an entire share. It bought me almost a quarter share because right now the current share price is $82.91. Then also scrolling down, I also bought more of Illinois Toolworks. That's going to go up, as well as Fifth Third. And remember that 6% dividend increase. I'll just show you really quick. Remember the old dividend was 35 cents. What we'll do is we'll put that in there and we'll see how that lowers the dividend. And so I would have been getting $17.94 if they didn't do that dividend increase for the next time that it pays. So put that in there. But that's what's I'm going to receive now, but it's going to be even higher. It's going to be over $19 because of the $20 that I put in, buying nearly half a share of Fifth Third. I'll show you that really quick. Yeah, 0.47, so really close to a half a share. So you can just do the quick math. It's going to add in half of 37. It's going to be about 18.5 cents. It's going to add approximately to Fifth Third. And the same is going to happen with JP Morgan and then AbbVie. So I've got those 1, 2, 3, 4, 5 captured. So we're going to go and we're going to grab some data from M1 to update this sheet. It's going to change these 5 values. It's going to change over here. The next dividend is going to increase it. We're going to see by how much. And also here for the cash flow, this is like my monthly paycheck for the portfolio. $1,011.63 is what it is currently. It's going to go up very modestly because remember it was a $100 deposit and then those dividend drips. It wasn't like I deposited $1,000, but it will move the needle, and we're going to track that also in the monthly average dividend tracking tab. But let's go grab that data over here from M1, and in this sheet I've designed it so I can just do a copy and paste of what's on my holdings tab, and everything on this holdings tab, it is arranged from my largest position to the smallest. You can see SCHD is my largest position, and SCHD is quite popular in the dividend community. You can see almost at $100,000 there, and share is 1,180. So I'll kind of scroll down. You can see what the rest of the portfolio consists of. I'll also leave a link below to my M1 Pi so you can see those companies and my allocations for each of those expressed in a percentage. So I'll scroll down. ADP is the smallest at 797. And I'm going to grab everything starting from name. We're going to scroll down. Do a copy. There we go. So we're going to go back over to the sheets, go to the M1 data tab, and really what it's going to do is it's going to grab the new number of shares, cost basis, and average, and it's going to change that on my dividend portfolio tab. And you'll see SCHD right up top here. It's going to change this, but it's not going to change BST because we didn't buy any more BST shares. So we're just going to do a pay special values only. Everything just goes in the A column. And then B and C and D, those columns are sorting this out. So it changed the shares, cost basis, and average for those 8 positions where I bought the additional shares in. So let's bounce back to the dividend portfolio tab. We'll scroll up here. And we'll take a look at, first we're going to look at the dividend drips here. So Microsoft, they pay a low dividend at 0.7%. So the next time this pays me in approximately December 13th, I'm going to get 571 instead of the 570. I could have just kept the dividend, not dripped it in, and just get 570 again on December 13th. But you can see though I'm snowballing this and trying to build my dividend income. And then with Home Depot, I received the 985, so next dividend on approximately March 13th, it'll be 991. And then Prudential, since this is a larger one, it moved the needle a little bit more from 47.12, and then 47.65 is what I'll be receiving from Prudential. Let's go take a look at the stocks now where the $20 was deployed for each of those. We can see the effect on SCHD from 972.74 to 972.94, so adding 20 cents to that. And then next up, Illinois Tool Works from 842 to 854. So you can kind of see how these are just incrementing up a little bit. And then Fifth Third, we broke past the $19 mark from 1897 to 1914. And everything that's highlighted in green here, the reason I do that is anything above $10 is highlighted in green. So some of these are going to be in green soon, like Merck. And we'll see some others, in the $9 range, like what is that? FNF, as well as BlackRock. There's others out there too. You get the idea. So next up, JP Morgan, $7.29 was the last dividend, and now it's going to pay me $7.41. And then rounded out, AbbVie, $40.07. But I don't think it's going to actually pay this, because in October, AbbVie historically has, sorry about that, I bumped the microphone. Historically, AbbVie has paid a larger dividend in October, so we'll see if they do that 5%. And if they do, I'm expecting then it's going to be an additional $2 more, because if it was a 10% dividend increase, it'd be $4, half that. 5% would be an extra $2. So it's going to be more like $42.24, right around there is actually what I'm expecting from AbbVie in November. So let's go down here. We'll take a look at the monthly cash flow average. The quarterly and annual changed as well, but I look at this as really as a monthly paycheck. And we can see it was at $1,011.63, and we are now at $1012.09. So you can see that progress there. We're going to carry this 101209 over to the monthly average dividend tracking tab and record this. Scroll all the way down. Put the new value in there, 1012.09. And we'll see the difference, the change to the monthly income. So this added an additional 46 cents to my monthly income, and that's additional stacking on top of. It's not a one-time, it's every month going forward. And you can see other things that move the needle as well. And we can see Fifth Third with that 6% dividend increase. What that did, it increased my monthly income by 35 cents. You can see other things like Exxon just moved by 3 cents. O Realty had a 0.2% dividend increase, and adding pennies here and there, but this all adds up. We can see here just for the month of September, I've added an additional $5.79 of dividend income to this portfolio, and it hasn't been because of large deposits. And let's go over to the dividend tracker tab. Portfolio value of $18,700. Here were the dividends in January 2021, $37.41. We're going to scroll down to more current times here. So we're in September 2024. Here's the portfolio value rounded to the nearest $100. Here are the dividends paid so far. Here are the quarterly dividends received so far in Q3. We're not even close to being done. Here is the monthly average dividend. You can see how this has just been going up like crazy. And then here is the monthly increase, the 579. Here's the month over month gain in percentage, 0.58%. You can see the annual dividend getting well over the $12,000 mark. So you can look at this as an annual paycheck too, is over $12,000 this portfolio will pay me. And that's if I don't put any more money into it, and if I withdraw all the dividends, it's going to pay me over $12,000. And it's not only that, it's going to increase because these stocks within this portfolio are constantly increasing their dividends. Even if I withdraw those dividends, I'm getting increases on those. So this is going to keep going up regardless if I do dividend drips or deposits. But I'm just speeding it up more by doing the dividend drips and then these $100 deposits twice a week. So let's move on to the total net worth statement. I'll show you that. And we're back up because today's been a pretty good day. We'll go back to show you the portfolio just last week here real quick. And I apologize, this laptop is just really struggling. I need to retire it. So over the last week, you can see we're up 2.68%. Let's look at the last day. Yeah, you can see we've moved up by 0.71%. Of course, the markets aren't closed, so this could retreat a little bit, but you can see we just been today's been a good day, as far as the markets, and it's going to reflect in my total net worth. And my dividend portfolio that I showed you over here, M1, that's about 15% of my net worth. Here's the other 85%, and that consists of, I have an IRA over at Vanguard, and this is a traditional IRA. You can see it's in boring ETFs, same with a small Roth IRA I have over there. And here's my taxable stock brokerage account, more Vanguard ETFs. So while I do pick individual stocks, I recommend that you have indexes, things like VU, VTI, VXUS, get a little bit of international exposure out there. But again, talk to a professional about that, because I don't know your financial situation. But here's my 401k. This is about the last 4 years of employment, and right now I'm not currently maxing out my 401k, but we can see that value almost up to $100,000. It's in a boring S&P 500 fund with Fidelity. And then M1, I have another IRA. This is my prior employments to the other 4 years. So this is pretty much the my professional career after college money right here. That's in this IRA, and this is my last job right here. So, or my current job, I should say. This is prior employment here. So, and again, it's in VU, VTI, SCHD, and BST. Those things, no individual positions in there. Here's the dividend portfolio. Here's my M1 savings account. It's getting 5%, and I recommend. If your money is not, making at least, 4.5–5%, move it into a high yield savings account. M1, it's FDIC insured, so that's where I have the bulk of my cash is sitting over there. I have some over at Synchrony. They just lowered their interest rate to 4.5%. They were at 4.65, and then prior to that, they were at 4.75. So they've moved it back 0.25%, a quarter percent. So that's why I've moved more money over to M1, because my interest income was eroding as a result. Here's my short-term money over here, pretty much like 2 months worth of expenses right over here at Capital One. Here is my home value. I don't put a whole lot of stock in my home value, because it really doesn't do anything to build my wealth or create freedom unless my home is paid off, which it is not. So we'll move on to liabilities. Here's my current credit card balance. I do pay my credit card off in full every single month and do not pay interest. That's not to say, though, earlier in my life, in my 20s, I did absolutely have credit card debt, and it was the worst. So I've paid interest. I've been there. Don't feel bad if you're in that position now. Just pay it off. Do everything you can. If you have credit card debt, don't even worry about investing. Pay it off first. That is my advice to you. Just knock out your debt if you have it first before even thinking about investing. I know there's a lot of FOMO about investing, but just set yourself up first without having debt. So here's another liability, which is my mortgage, and I'm planning to pay that off early. I've been incrementing my mortgage payment by $100 every single month just to get this off my back, and I'm also thinking about just doing like a one-time payment, possibly selling this taxable account. We can see it's pretty close to the sum of what I owe on the house at $177,400, but I would have a taxable event though. But I have the cash also to pay for the taxes, as well as the the additional $3,000, $4,000 that I would need to make up for that as well. So that would really lower my expenses. It really wouldn't do much to my net worth, but it would just be something that would simplify my life and lower my expenses. Above the $1.7 million mark. You can see what that breakdown is right here in stocks, home equity, and cash. And then I also separated by pre-tax, after-tax, and U.S. and international as well. We can see here, here's my average monthly dividend. I always gloss over this. This includes my dividends from my IRA over here and 401k, and I've annualized that because things like VTI, VYM, VXUS, they have a variable dividend. So what I've done is I took the dividend from 2023 and then I divided it out to get an average monthly dividend, dividing that by 12 and then multiplying it by the number of shares to get monthly income out of these investments as well. So you can see once I'm 59.5, I'm going to have an income stream of $3,320.53 just rolling in to me automatically. Just that's what I'm going to get on average every single month going forward. And that, of course, that's going to increase with dividend increases as well. And since I'm not able to tap that, I have to wait another about eight and a half years or so. This is going to go up, over 8 years of me investing more, as well as those dividend increases as well. So it's going to be way higher. So we can take a look to just tracking, my net worth over here, starting from November 2022. We can see we were below 1.3, and this is only a couple of years ago. And we'll just see how this has gone up over time here. And again, we're at the 1.7 mark. We're still not at the high water mark of August at 1.714. And this is not due to, like an influx of like an inheritance or hitting it big at the casino or a lottery or even a big, a hot stock pick or Bitcoin, nothing like that. No, it's been just consistently investing in these investments. My 401k and just things like that, and these ETFs mainly have what has been increasing my net worth and my wealth over time. You can see again just how how much has moved over just a couple years, less than 2 years here. It's insane. And will that continue? Who knows? Or at this rate, who knows? There's going to be some times where I'm even probably down in a year where we could go into a major recession, even though I think we're in a recession right now. I think really the rise of the stock market we've seen lately has just been due to the crazy inflation. Of course, the value of these companies, with stocks, the value of them has increased due to inflation, which has therefore raised the value of the stock market. I think that's where really a lot of this is coming from. So, let me know, in the comments below if you disagree with me, but that's what I think. But we'll go back to the activity log. I'll show you what those stocks were. I know I've been rambling for a while, and I apologize, but here's my picks again. AbbVie, Fifth Third, SCHD, Illinois Toolworks, and JP Morgan. Let me know in the comments below what you bought this week and what you think about my stock picks. I hope everyone